Good morning. It's Tuesday, May 1st, about 6 a.m. Central Time. Overnight, the precious metals are mixed after April was filled with many highs and lows, not only in the precious metals, but also in many other markets. We saw new all-time highs in the gold and 2024 contract highs in crude oil. Platinum swung over $100, and U.S. equities came under considerable pressure as the VIX gained about 16.74%. So reflecting on April's performance, we had gold up 2.63%, silver up 5.44%, copper up 1.3, copper up 13.3, and platinum up 2.68%. So copper was your best performer. If you look a lot of the major banks out there, they've been predicting a much tighter supply picture and an increasing demand picture with a green energy revolution, and then also EV vehicle sales and things like that. They want to upgrade things like the grid, and a lot of it takes significant amounts of copper. Mining capacity has really been strained in the copper industry, and that's why you're seeing copper prices push higher. Yesterday, interestingly enough, copper futures hit a new contract high before being slammed down significantly on weaker Chinese data. That's what dragged that silver market down, and then it was a series of stop losses being hit. Now, silver, on the other hand, had a this is it moment on April 12th after breaching $29. We went up to about $29.90. It was just below $30. I mean, the phone was ringing off the hook with people looking for leverage plays, and with geopolitical tensions rising, people needed that 24-hour access. We saw the two peaks on gold, silver, crude oil all this month all occurred on a Sunday night, and that seems to be a reoccurring theme. You get things bottling up and brewing on a Friday, and as the week comes to a close, people get more anxiety, and it's a blow off on Sunday nights. So I always said that Sunday nights are a day for taking profits, not reestablishing or establishing new positions. What people could do is, as the market comes up onto that Friday, if you want to take something off, you could take it off and then put on some kind of proxy like a call option. That way you have that limited exposure there. I believe stop losses will most likely be triggered on that thinner trading, and again, a lot of that anxiety that's out there. So, the safe haven trade, that also came front and center in April. We saw Israel retaliate against Iran. Iran retaliate back against Israel with a counter strike that occurred on a Sunday night. And by the next morning, the markets were unchanged. We saw the Dow Jones down 600 points. We saw gold and silver get ready to take off. We had crude oil futures up $3-4. And by the end of it, it was like it was all a dream and we were back to unchanged. So the focus really now is on the strength of the rising dollar, the rising treasury yields, the softer Chinese economic data, and the declining prospects of a U.S. interest rate cut in 2024. We're going to have a Fed meeting here today. Jerome Powell is supposed to come out hawkish. He's supposed to kind of take these rate cuts off the table, but it seems like they've been whittling these away one at a time. We had 6 interest rate cuts priced in December, and then as you go on the year progresses, we're going to take it down. So I'm really surprised, and I'd be interested to see if they take them completely off the board or they do slip one in before you get the election, because a lot of people believe that the Fed is now politically charged, as Donald Trump was very aggressive on Jerome Powell and indicated that he would most likely axe him if he's back in office. So, we'll see what happens here. So looking at the gold market, your first level of support, your major support yesterday was 23.20. So remember, 23.20, once it breaks, that will be old support, new resistance. So we saw a larger correction from that 23.20 down to the 2300. And then we should see a battleground take place around 2300. If you look over in the overnight session, we got down to a 2291. Not really any real number there. It was probably just trickles of stop losses being hit below the 2300 level. I think really kind of your defining next level I'm going to be watching is 2273. If we close below that, the bears will come in control of the gold market, which is something we haven't seen in quite a long time. Now, the problem that precious metal bears have is that they've got a number of key support lines and also rising moving averages that they have to deal with. You have a lot of people that'll buy against the 50-day moving average, the 200-day moving average, the 100-day moving average. They'll buy against all those, and with the 50 firmly above the 200, you'll see that golden cross. Those players will come in and they'll be buying the support levels there as well. So, I don't like things on the gold chart such as DMI minus crossing over plus. We haven't seen that forever. And then also stochastics are grinding down. They're not in the oversold territory, but they are going down. And then if you look at ADX, which measures the strength of the trend, that's also petered out and rolling over as well. So the strength of this upward trend has had the rug pulled out from underneath them. And then you do have a number of different little technical things that have caused people to shift to more of a negative sentiment. Now, the sell-off yesterday, not specifically picking on precious metals. I mean, they hit everything. Coffee was limit down. So what they'll cite is they'll say that with U.S. equities selling off, and that 5160, that 50 to 60 that I outlined, was that formidable resistance level. 5100 is going to be your key level today. You want to see that market come up to 5100. That'll be the first test on the S&P 500. I believe we're at the pocket support right now. This 5040 down to about 5030 at the moment. So you'll see some people come in and try and buy this market for it to drift higher. But it's going to be kind of a frantic day here today. So again, like most of the softs were all down. All your meats were down significantly. Your cryptocurrencies were down massive. Your grains were down. The dollar index poked up back over 106. All the foreign currencies were down. So if you're going to counter trend trade, just use stop losses, use the micro contracts, and then use options as well. So if you don't have an options plan, just let me know. I could shoot you over one or two. That would be just a real inexpensive way to start to play some of these markets. I know I will be looking at upside positioning in the precious metals today. I'll also be looking at upside in some of the crude oil. Remember, you can go out on the micro contract pretty far out. You can do the March, you can do the June as well. So there's a lot of good things out there and a lot of things to look at. But you got any questions, give me a call. I'll be on the Schwab Network after the Fed meeting, giving some reaction and some color to what happened. And again, you need anything, give me a call, 312-858-7303. Also, I'm going to be shooting out a note that goes along with the Metals Minute for our clients here that get the email version of this. So if you're watching this on YouTube, you're going to want to sign up at BlueLineFutures.com. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trade.